table discussion this morning. But the song that you just heard is Jimmy Cliff, Many Rivers to Cross. Very powerful song. I mean, talking about some of the challenges that he has to cross and how his mind was wandering and all of that. Yeah, so I know many of us also have certain rivers to cross. I pray that God helps us to be able to cross all of that. But may his soul rest in perfect peace. Jimmy Cliff, very, very great musician and actor. Anyway, let's get into our roundtable discussion this morning. And today we're diving into a topic many of us think about, but few of us fully understand. And somebody was telling me just a few minutes ago that, oh, he was actually trying to research about stocks just last week. And he only, I mean, he saw that our topic for today's conversation is on stocks. So he was trying to learn about it. So it means that this is going to be a good resource for him. I hope that it is a good resource for you as well. We're talking about investing in stocks and I mean on the Ghana Stock Exchange. Now, for years, many of us have saved diligently, but watching interest trickle in can be quite frustrating. I mean, but stocks actually offer a chance to grow your money and dividends and also build long-term wealth. But the market can feel intimidating and even confusing. And that's why this morning we're trying to break it all down in simple and practical terms. We're going to talk about how to choose the right brokerage, the pick companies you understand, and all of these things that will help you. So please stay tuned. My guest this morning is Patrick Abankwah. He's a financial analyst and an investment advisor, and he joins me this morning for our conversation. Hi, Patrick. Good morning.
Yeah, good morning.
How are you doing, sir?
Yes, I'm doing very well. How are you too?
Yeah, I'm doing very well too, by God's grace. Thanks so much for joining us this morning.
Sure. A pleasure.
All right. Okay. So let's get into our conversation. Maybe for starters, oftentimes we hear of stocks, but many of us don't know exactly what it is. If we can start from there, I would be very glad. So tell us, what exactly, when we talk about stocks, what does it mean?
Thank you very much, and good morning to everyone who is listening and watching us this morning. When you talk of stocks, what we basically mean is that you want to put your money into a company so that you become a part owner of that company. So let's make it practical. Assuming I have a company, like the company's name is Patrick Limited. At some point in time, I may want to expand that particular company, and I want people to also be part owners of that company. So I'll ask people to bring in their money to support the business that we are doing so that when the business makes profit, they will gain some of the profit because they are owners of the company. When they bring their money into my company, that money is what we call that they are buying shares or the stocks in my company. So that's basically what shares or stocks mean in the layman's language.
I see. So if I walk to you, as the CEO, I mean, you are the CEO of Patrick Limited, and I come to you and I say, well, I have this amount of money, I want to give it to you so that you put it in your business, and at the end of the day, you give me some profit. Is that investing in stocks, or there's a particular place I have to go to invest in that?
Okay, so if you walk to me that you want to invest in my business, and I take that particular money from you as a one-on-one engagement, that is not directly investing in shares or stocks. If you want to invest in shares or stocks in Ghana, for example, there's a licensed body or an institution that have all companies that want to invest in stocks listed or registered with them. So you need to go through that particular institution, which we call the Ghana Stock Exchange Market or Ghana Stock Exchange. And that is where I'll be able to buy the shares of Patrick Limited if it's available on that particular market. If I walk to Patrick Limited directly, then that becomes a partnership kind of agreement between myself and the company. That is not directly as becoming a shareholder, because a shareholder has to go through certain rudiments, which is licensed under the Ghana Stock Exchange agreement. So that is the difference between walking to the company directly to buy it or going through the particular route, which is the licensed Ghana Stock Exchange market. If the company is issuing or selling their shares for the very first time, usually that engagement is directly with the company. So they will give out a process of how you can buy the shares from them directly, and that way is the first time. But once the first sale is over, every other purchase or sale has to go through the Ghana Stock Exchange arrangement.
I see. You mentioned something like shares. What is that?
So shares is the same thing as stocks. It's just the American and the British way of differentiating between the two. So I think one of them is American, one of them is the British system. It's basically the same thing, buying a stake in a company. So a stake here is you are buying shares. You are becoming a shareholder. So that is from the word shareholder. If you are buying shares in the company, I become a shareholder of that company. And what I'm holding, that particular share is the same thing that we call as stocks. So I've invested in stocks in that particular company.
Right. So thank you. What exactly happens on the Ghana Stock Exchange? I know I can go there to buy. Does it mean that the companies are selling their stocks, they are selling the shares there? Do they have like a number of shares they are selling, or they can be, I mean, what exactly goes on there?
Okay, thank you very much. So when you talk of the Ghana Stock Exchange, it's more like an organized marketplace. If you want to make it practical, it's like going to a local market, and instead of going to buy your tomatoes, your onions, this time you are going to buy shares, or you are going to buy a part ownership of a company. And in Ghana's biggest space that companies are able to sell their shares is the Ghana Stock Exchange. So we have a lot of big companies that have all been listed on the stock market. What happens on the stock market is basically that you get the opportunity to buy a stake in a company. And as I said, once you buy a stake in that company, you become a shareholder. And the company gets the money to grow their business. And as they grow their business, you also get the opportunity or the chance as an investor to benefit from the growth that the company is making. Investment. There are two ways that you can benefit from this investment. The first one is that when a company makes profit and the shareholders meet, the board of directors meet, they would declare that, okay, we have made, let's say, 1 million Ghana cedis profit. We want to, out of the 1 million Ghana cedis, we want to share 800,000 cedis out of that to our shareholders. So everyone that has a stake in that particular company, they will enjoy a part of the 800,000 Ghana cedis profit that shareholders have agreed to distribute among themselves. We call that dividends. So instead of, let's say, going to the bank and say I'm doing treasury bill where I get interest on my investment in the stock market, it is called dividends. So the dividends is something that will be paid to you sometimes yearly, sometimes half yearly. So it's based on the profit that the company has made that they give you that a part of it to enjoy because you have also put your money into the business for the business to grow. So that's the first reason why people want to invest and the benefit that they get out of that. The second benefit of going into the stock market is what we call increase in the share price, or in technical terms, we call it capital gain. Now, if I'm breaking it down, what it means is that every share has a price.
Okay.
So let's say I'm buying a share of a particular company. Today, the price of that one share is 1 Ghana cedis today. Now, as the company grows, as they make more profits, as their customer base grows, it has direct correlation with the share price also growing. So let's say I bought it 1 cedi in January. The company has been doing very well. The industry is doing very well. As we speak, that share price can move from 1 cedi to about 3 cedis. What it means is that my investment in that particular company has increased by 2 Ghana cedis within the period that I'm talking about. If I decide to sell the shares that I bought at 1 cedi, it means that I've made a profit of 2 cedi on each of the shares I'm holding. So we call it capital gain.
Okay.
So these are the two main benefits that people derive when they go into shares on the stock market. One, if the company makes profit, they enjoy profit in the form of dividends. Two, if the company is doing well, it has a tendency for the share price to go up. And once the share price goes up, they also make profit out of that, which we call the capital gain. So it's basically a platform where the buyers, which are investors, and the sellers, who can be investors or the company themselves, meet to trade among themselves. And it's a very transparent process, which is regulated by certain requirements and laws of the country.
I see. I like how you break all of that down. Now there are people that think that stock investing in stocks is for the rich. What do you have to say to that?
Yeah, those who have that kind of perception, I don't blame them because for so many years that has been the perception and that has been the practice for investing in shares. It used to be the fact that in those days, if you wanted to go into shares, there was a minimum number of shares that you needed to buy in a company to become a shareholder. So I remember back in those days, before you can become a shareholder of a company, the minimum number of shares that you needed to buy was around 1,000 shares. It means that if I don't have 1,000 shares times the price of that particular company's share, I couldn't be a shareholder of a company. So that perception has been there, and that has practice has been there. But we've seen that in recent times, things have changed within the stock market. Sometimes people also think that the stock market is a bit complicated. It's not as easy as we see with treasury bills, because treasury bill, I go in and I'm promised 10%. I can easily calculate the returns I make out of that. So it's more simplified. It's so because investment like fixed deposit treasury bill, we call them fixed term income. Fixed term here means that you are guaranteed a certain returns. Stocks, there are no guaranteed returns. So people look at that and say, okay, because I cannot predict how much I'm going to make at the end of the period, then I mean, it's not something that I want to go into it. So that kind of fear is there. And the last reason that I can attribute to why people think of shares as such is the fact that people think investing in shares is a high risk investment. People even think that it's a form of a glorified gambling where it's either you win or lose. So that has been the perception of people over the period of time. But all of these things can just be managed with education. And that's what I think we are doing this morning. When people get to understand how these things work, more people begin to go into shares and begin to invest for the long term. What we need to keep at the back of our mind is that shares are long-term investments. They are not a 3 months, 6 months kind of investment. If you are going into shares, you are going into shares because you want to leave your money with the company for so many years. Because one, you are going to enjoy dividends, and two, you expect that the price of the company will increase over the period of time, and then you begin to see the benefit out of that. One of the things that have helped the stock market this particular year is the fact that treasury bill rates have gone down, and now investors are looking for other options that will give them more returns. And luckily for most of the investors, this year the shares have been doing quite well. And that's why people are beginning to ask questions and beginning to probe for more information on how they can go into that particular space. So I hope that this conversation we are having this morning, I mean, it will be a useful one to a number of investors out there.
Right. I hope so too. Now, why is it important? Or what is the importance of stock investing for the everyday Ghanaian who wants to grow their money?
So the first thing is that stocks are generational investments. That's the first thing we need to understand. What it means is that you can always pass your ownership in a particular company to the next generation. When you go to developed countries, there are people that are holding on to shares in a particular company for over 200, 300 years. So it was started by their great-great-grandfather. They pass on, and now it has gotten to their generation. Why? Wow. Because when you hold shares in a particular company and the company is doing well over the period of time, you are always guaranteed of some returns over the period of time. So that's the first thing. The second thing is that as you invest in these companies, you are also supporting these companies to become bigger. When they become bigger, it will surprise you to know that maybe in future, your son or your daughter may get opportunity to work in that company because of your investment. So it is not just something that is benefiting you as an investor alone, but you're also creating opportunity to help a company expand. And once they expand, opportunities out there for you as an investor is also a bigger one. So that's the second thing. The third thing is that currently, as we speak, if you look at the projection for the next 2 or 3 years, the stock market is expected to do better than fixed term income investment like treasury bill fixed deposit. Currently, we have fixed deposit treasury bill ranging around 11%, 12%. Most of the stocks that we have in Ghana today for this year, the average that you see in terms of growth is around 50% and above. Some have even done over 300% as we speak in terms of the price of the share from beginning of the year to now. So it has a potential to give you more if you go into that particular stage. So For the average Ghanaian who wants to invest into any kind of investment portfolio, it's always important that you spread your risks according to your one investment goal. What is the goal of the investment? Is it for retirement? Is it to build a house in future? Is it for a child's education? You need to be clear in your mind what kind of goal that you are pursuing with your investment. The second thing is that how much risks are you willing to take? Of course, investing in shares will not give you the same level of risks as fixed deposit or treasury bills, but it also promises higher returns because in investment, the higher the risks, the higher the return. So that's something that you also need to keep in mind. The third one is that how long do you want to go into that particular investment? Every investment, by its very nature, has a tenure or a term or a period. So if you are looking for a short-term investment, don't go and pick a long-term instrument to match up that. Otherwise, there will be a mismatch. You will not see your investment growing within the period that you are looking at. So for me, these are the benefits and the opportunities out there for people that want to go into shares as we speak, and what they need to also keep at the back of your mind as they zoom into that particular space.
All right. So here in Ghana, what are some of the companies you can actually invest in on the Ghana Stock Exchange or the stock market?
Sure. So the companies that are listed on the stock market, if I'm not mistaken, they are more than, I think, about 40 or 50, more than that in Ghana. And they are categorized according to various industries. So we have some companies within the telecommunication industry. We have companies that are grouped according to the financial sector. There are companies that are grouped according to the oil sector. There are companies that are grouped according to the commodities sector. So, for example, if you pick telecommunication sector or the network or the industry, we have a company like MTN, who is a market leader in the Ghana Stock Exchange. They have the highest trade volumes on the stock exchange. In terms of you pick the total stocks that we have on the Ghana Stock Exchange, they have the highest. So MTN is the one leading in terms of the telecommunication. If you come to the financial sector or the banking sector, we have companies like GCB, we have companies like Cowbank, we have companies like EcoBank. These are all listed on the stock market. Access Bank, they are all there. They are all part of the companies within the banking industry or financial sector. We will have SIC within the insurance space also listed over there. Then when you go to the oil sector, you can have companies like Total Ghana or Total Energies. Well, is also listed over there. So there are a number of companies that are listed according to the various industries that we have in Ghana. The key thing is that if you are going into shares, you try as much as possible to spread your risks across a number of industries. So, for example, you don't need to put all your investment into, let's say, the banking industry. Why? Because if tomorrow the banking industry does not do well, it affects all companies that are listed on that particular stock market within the industry. If you keep all your money in, let's say, the oil sector, and let's say there's an issue with this Ukraine-Russia war is affecting oil price and those things, it can affect companies that are listed within the oil sector. The same being if there's something happening within the telecommunication network, and that's where you have all your investment. When MTN price begins to go down, it can affect you. So when you're going into investment, you spread your risks across various industries as much as you can. If you want to stay within 2 or 3 companies, that's fine, but you want to manage the risks and concentration of your investment within a particular industry. So I think I've mentioned about 4 or 5 companies or 6 companies, depending on the industry that you want to really go into.
All right. So kindly hold on for me. 21 minutes after 9, this is a business breakfast on Z101.9 FM. If you just tuned in this morning, we're having a conversation on how to invest in stocks and whatever you need to know investing in stocks here in Ghana. You can join a conversation. If you have any questions or comments, feel free to send them to me on 0544321019, 0544321019. We are streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please drop a comment on any of our posts and we'll read them for you. So my guest this morning is Patrick Ba Abankwa. He is a financial analyst and also an investment advisor, and he's helping us understand what exactly the stock market is all about and how you can get in there. And so We've spoken briefly about what exactly the stocks are. We talked about some of the companies that are listed there, what shares also mean, and all of that. You've not missed so much because we are now about to get into the nitty gritties proper. And so please stay tuned as we continue the conversation. Patrick, so let's continue.
Yes.
Now, let's get into the details proper. Now, if I want to get into the stock market today, what is the first step I have to take before buying any stock?
Okay, so the first step that you need to take if you want to go into any particular stock is that you need to be abreast with the stock market. You need to spend some time to read about companies that are listed on the stock market, how they fared over the period of time. And these are things that you can easily get online. You go to the Ghana Stock Exchange website, you can be able to track reports of companies that are listed and how they fared over the period of time. So that's the first thing that you need to do: education, understand how the stock market works and the companies that are listed over there. The next important step is to now go into the stock market. Now, as I've said earlier on, you cannot walk to, let's say, MTN's office to say that you want to buy shares, so they should give you a form at the office for you to complete. If you want to buy shares, the rules says that you need to get the shares bought through a licensed institution, which we call the brokers or broker. Now, these are companies that have been licensed by the Security and Exchange Commission to help people to buy shares. So you need to first of all approach a broker, and then you open what we call a brokerage account. Brokerage accounts. Think of brokerage account like a bank account that you are going to open with any bank. So you need to open a brokerage account through the stockbroker. And when you open that account, you will now be given an access to fund the account, which basically means that you put money into that brokerage account. And this brokerage account is open with the bank that the broker will suggest. So let's say I go to a broker that I want to buy shares. The broker will ask me that, okay, go and open an account at this bank with this particular account number, which will be your brokerage account. So I go there, I go to the bank, I open that account. If I already have an account with the bank, they will just open that brokerage account under my main account. And then I'll put money into that brokerage account. The amount that I want to use to invest, I'll put that money into the brokerage account. Now, when that is done, I will now engage the broker and tell the broker the kind of shares that I want to buy. So I'll tell the broker, okay, I want to buy, let's say, 500 shares in MTN. I want to buy 200 shares in, let's say, GCB Bank. I want to buy 100 shares in SIC. So that's the conversation that I'll get into with the broker. Now, when I give the broker that instruction, now it hinges on the broker to now go to the market to get the availability of the shares that I want to buy, and then they'll buy it for me.
Right.
Now, I use the word availability of shares. As we speak, if a company is not issuing out new shares or asking people to bring in new money into their business, the only shares that will be available on the stock market will be shares that people are selling. So let's say MTN currently has, let's say, 1 million shares. If people who are holding the 1 million shares are not selling, none of the shareholders decide not to sell that 1 million, it means that for 1 week or 2 weeks or 1 month, if you go to the stock market, you won't get MTN shares to buy. So what the broker does is that they are on the lookout for, okay, who is selling his or her shares at what time.
Right.
Once they're able to project and see the availability of that, then they buy it for you. So sometimes you can put in the request to buy, let's say, 500 shares. You see that in a particular week, you can only get 50 shares to buy, but that's what was available at the time that the broker wanted to buy from you, and that's what they'll buy for you. So that's how the process works. Some way, somehow, or by the use of technology, some of these brokers have been able to develop mobile apps that you don't need to go through the process of filling the form, going to the office. You can do everything on the app. So you go to the app just like you'd have done with the office. You complete the form on the app. You attach your ID. And this is very important. Let me just stress here. You cannot invest in shares in Ghana without a Ghana card. If you don't have the Ghana card, you cannot go into shares. So as part of the process, whether you go to their office or you are using the app, you need to upload your Ghana card for it to be verified. Once it's verified, it's part of the process. So once you verify that on the app, they will give the options to see the shares and the prices. Then you put in the request to buy it. If you put in the request to buy it within 1 month, if they're not able to buy it, that request expires and you need to do it again. So that's for those that are using the app. Otherwise, if you fill the form physically with the broker, the money will be in your brokerage account until they get some to buy, and then your account will be debited. So that's the simple process of, first of all, going into the stock market, how you can go into it, the form that you need to fill, and how the process works after you have filled the form. Because I get this a lot on social media that people will complain that I filled the form, I put in the request, they are not buying the shares, they are delaying. Right. It is not the fault of the broker when that happens, because if I go to the market to buy something and there's no availability of the thing to buy, there's no way the broker will be able to buy it for me. So we need to keep that at the back of our minds again as we go into the stock market and we decide to go into shares.
All right, but how does one choose a reliable brokerage or brokerage firm or broker in Ghana? Are there some red flags that people or beginners should watch out for?
For now, the first thing I would say is that all the brokerage companies that we have in Ghana are doing well. They are well capitalized. So in terms of their regulatory compliance, they are all highly regulated. They have their requirements met. The only difference between a broker or brokers is that you have to look at their track record in terms of how long they have been in the system, what kind of companies have they helped to raise capital, and which the companies are they fronting when it comes to buying of these shares. These are the basic things that we need to check out for. And luckily, if you go to the Ghana Stock Exchange market today or the website today, you can see a tall list of about 24 or 23 stockbrokers, and it has details of all their companies that they've helped to raise capital for, and those that they are very good when it comes to buying shares from. So, for example, if I want to go into a particular company or buy shares in a particular company, like let's say MTN, one of the brokers that are very good when it comes to buying MTN shares would be like IC Wealth. So IC Wealth, they have done it for MTN for so many years. So if I want to go into MTN, IC Wealth is one that comes to mind. Doesn't mean that other stockbrokers cannot buy MTN shares for you, but they have the track record of buying more for customers over the period of time. So these are the things that you need to consider when you are going into which particular company to engage in. With that said, any broker that you engage can get you any share that you want to buy in Ghana. It's not like this particular broker is tied to this particular company only. So if you don't get that broker, you can't get that share. That's not how it works. But it's just based on their track record in buying more of a particular share from a particular company.
Right. So a very important step is to actually go and check the Security Exchange Commission's website and get to know which ones are licensed or not. Because I know that there are some people that are on the market acting as brokers, but they are not really licensed. Is that true?
Yes, exactly. And let me just also add this by way of education. You know, in our day-to-day use of language, when we hear a broker, sometimes we think that the broker is an individual, like let's say me, an individual who can help you to buy shares in the company. No, brokers are licensed companies, so they have a whole setup as a company, board of directors, and all those things. So if you're engaging a broker, and we use the word broker, it's not an individual. You may have agents that are part of the company who, when you go to their office, they can help you to complete the process. But you are not dealing with them as individuals. It's a company that you are dealing with. So if someone meets you on social media and says that I can help you to buy X number of shares in this particular company, this is my fee, and don't listen to them. Go to the company directly, because brokers are not individuals. They are companies that are licensed, so to speak, and they are given the mandate to help people to buy the shares. So let's keep that in mind as well.
Very important. Now, you talked about the account. I know there's something called CSD account. What is that, and why is that important for investing in Ghana?
Okay, so every investment that you do within the financial space, especially for treasury bills and then stocks, you need to create or get what we call the CSD account. The CSD basically means that the Central Securities Depository Account. It's a unit at Bank of Ghana and also SEC, Security and Exchange Commission, where they keep files of every application that comes in for treasury bill and then shares. So they need to create that account for you, and that account is what you use to open the brokerage account, that account number. So if you check your treasury bill certificate today, you see your CSD number there. That CSD number is unique to you. Anytime you want to do treasury bills, that's the number that the bank will use to buy new one for you. The same thing applies for shares. You need that specialized number, which is tied to your name for every share that you buy going forward. So that is something that the stockbroker will apply on your behalf for you to get before they start the process to buy the shares for you. So without the CSD account number, you can't go through that. And that's why sometimes people complete the form to start the process, but because their Ghana card cannot be verified, the CSD delays or they don't get a CSD. And if you don't get a CSD, there's no way you can go into the shares or be able to buy shares in Ghana.
All right. Okay. So I needed you to give that information as well. Now, how much money is realistic for someone to go into stock investing? Must they be quotes and non-quotes a lot?
No. So as I said earlier on, in the past, we needed the minimum number of shares to buy in a company to become a shareholder. So let's say if the share price was 1,000 cedis in the past, I needed to have 1,000 Ghana cedis to become a shareholder in a particular company. Now that has changed. Things are a bit flexible now. The most important part is that you don't need a lot to go into that particular space. Most of these brokerage firms have minimum requirement that you need. It's very low. Some even allow you to start with 50 Ghana cedis, some 100 cedis to get started. I mean, to buy the shares. What's the most important thing here is it's not about the amount for me, it's about the consistency. So you can set up a brokerage account and be putting money into it, let's say every month. And once you put in the request, you ask your broker to buy X amount of shares for you. Or if you are using the app yourself, you load it and then you buy it yourself. That's how you grow your shares over the period of time. So any amount of money that you have, you can be able to buy the shares. But keep at the back of your mind that every share has a price. So the minimum amount that you put in your account should be able to buy at least one share. If you put in a request or an amount that cannot buy one share, there's no way the share can be bought for you. And I'm saying this because some shares are quite expensive. Let's take an example like the new gold issuers. New gold issuers on the stock market, their icon or their number or name is JLD. JLD. Here you are investing in gold, and it's something that is managed by Absa Bank. Now, the last time I checked, one share of the GLD was around 400 cedis. Means that if you don't have 400 cedis, you can't buy that particular share.
Okay.
So whilst we are saying that there's no minimum amount and all those things, you have to keep at the back of your mind that every share has a price. So the amount you put in your account to buy the shares should be more than the value of the share that you're going to buy. Otherwise, that process cannot be executed for you.
Okay, so very important. Well, 37 minutes after 9, this is a business breakfast on Z101.9 FM with me, Nitrebi Hammond. And this morning, like I said, we're talking about stock market, investing in Ghana, and we're trying to understand exactly what it is about and how you can even get in there. We've had a great conversation so far. We're going to talk about choosing the stocks and also the strategy that you need, and also maybe we'll look at some of the mistakes that people make, and then we'll wrap up this morning. But my guest is Patrick Bankwa. He's a financial analyst and an investment advisor, and he's been helping us understand these things. Now, if you just tuned in, you can join the conversation on our WhatsApp platform on 0544321019, 0544321019. You can send your questions to that number. You can as well call me on 030-3956-641, 030-3956-641, and then I give you the opportunity to ask your questions or make your comments. Also, we are streaming live on Facebook at ZFMGH. ZFMGH on Facebook, and also Z Multimedia on YouTube. you can visit those platforms and drop a comment under our post, and we'll read them for you as well. All right, Patrick, let's continue our conversation. Let's talk about choosing the stock itself. Now, you told us that there are certain stocks that have been listed, so you can get, based on the companies or the industries. So we have industries like the oil industry, we can talk about the financial sector, we can talk about the telecoms and all of that. How do I choose a particular stock to invest in? What are the key factors that you usually advise your clients to look at?
Thank you very much once again. So if you are going into the stock market and you want to know what are the things that you need to look out for. As an investor, you want to be a partner of a financially healthy business. You want to put your money into a company that has the potential to give you more. So the three key factors that I always advise people is that you have to look at a company that has been consistently profitable. So the company should be making money year after year, and that can easily be checked from their financial statements. You'll be able to see their net profit in their annual reports. So that will give you an idea of, let's say, the last 5 years, how much profit has the company made, and is it growing over the period of time? So that's the first thing. Second thing you also want to check is how good is their management and their brand? Does the company have a clear vision? Is the brand well loved and trusted by people, especially if you are doing it in Ghana? Do Ghanaians trust that brand? Do they have a strong management team which is driving their long-term success? That's also something that you need to also check. And again, these are things that you can easily check online. Go to their website, look at their management profile. Who are these people? What's their experience within the space that they are driving it? Then the third equally important thing that you need to also ask yourself is this company a company that pays dividends over the period of time? Are they reliable when it comes to dividends? While not every strong company will decide to pay dividends, those that do and have a history of paying dividends consistently show financial stability. It's a sign that they are financially stable and a commitment to rewarding shareholders. Sometimes there's no point in holding shares in a company when the only thing you benefit from the company is capital gain, your share price going up. You also want to be enjoying some dividends year on year. So you look out for the companies that, while they are doing very well in terms of the share price going up, they are also paying dividends. These three for me are critical when you want to decide and choose a company that you want to invest in over the period of time, because, as I said, year on year, you want to be enjoying real benefit, which is paid to you in the form of dividends. At the same time, you also want to see your share price going up so that in future, if you decide to sell, you are going to make money out of that. So these are the three factors that for me, you need to put your mind around before you jump into any kind of shares in Ghana.
Right. So Patrick, that means that there are companies that do not pay dividends, isn't it?
Yes. There are a lot of companies, especially for now. If you look at the banking industry, post-COVID, most of the banks do not pay dividends now because there was a halt by Bank of Ghana that companies or banks should not pay dividends until they get prior approval from Bank of Ghana. I know that is changing a bit now. I think they are being relaxed a bit. So you can imagine from about 2021 all the way to now, most of the banks have not paid, or let's say all the banks have not paid dividends because of that restriction from Bank of Ghana. So that is actually the case. It's not just the banking industry, the other industry that companies make profit over the period of time, but they don't pay dividends. They reinvest the money back into the business to expand it. It's also one of the ways that you can also grow your investment, because when they expand it, it means that your share price will also go up. So you need to keep that at the back of your mind. And that's why strategy is important. It's your strategy to be benefiting from the dividends year on year, or your strategy that you are giving yourself 10 years, by which time your investment would have grown by, let's say, 1,000%, 2,000%. This is something that you need to keep in mind as you decide on the companies that you want to go with.
All right. So let's say somebody's listening to us this morning and they want to get started. Okay, before that, which companies actually pay dividends here in Ghana?
I don't have the full list with me, but one of the companies that consistently has been paying dividends year on year has to do with MTN Ghana. MTN Ghana has been paying dividends, if I'm not mistaken, for the last 5 years, and they even paid sometimes half yearly. They do pay dividends. I know Total Ghana too has been paying dividends over the period. Total Ghana is also one company that has been paying dividends. Benso Oil Palm Plantation has also been paying dividends, if I'm not mistaken. On top of mind, these are some of the companies that have shown track record of consistent payment of dividends over the period of time.
Right. Okay. So now you've told us that it's very important to understand the business behind the stock. I mean, get to know their financials and all of that. Can you give like an example of a company that is beginner friendly?
Sorry, I didn't get the last part well.
So I'm asking that, can you give us an example of a company that's beginner friendly, a company that somebody can start with?
Yeah, so if you want to look at beginner friendly, I think the obvious one will be MTN Ghana. And it's no coincidence that at the moment they are the biggest company on the stock market. One, because of how easy it is when you want to gain some dividends, they pay dividends a lot. So if you are going into that space and you want to be making some little dividends and interest payments, then MTN Ghana is one area that you want to look out for. Also, because if you want to sell MTN Ghana today, you don't struggle to sell. There are some shares that perhaps you may have very good in terms of the value going up, but when you are selling, people are not willing to actually buy it. So you want to also consider that MTN has shown consistently that if I'm holding MTN shares today, I put in the request to sell it today, I will get somebody to buy because of how the industry has been favoring them over the period of time. So MTN for me will be one of the areas we want to look out for. Another company will be like GCB Bank. GCB has shown strong performance from last 2 years, all the way to this year. And if you check their share price, it's really, really going up. The only difficulty is that it's difficult to get some of their shares to buy because most of the shareholders with GCB are not willing to sell a part of their shares. So, but if you get some to buy, that's one area that you need to also really go into. Total Ghana consistently go. These are all companies that have also been doing well within the oil sector. So, if you have to choose one, for me, it will be MTN. And then if I have to add maybe 2 or 3, you can look out for GCB, you can look out for Well or Total, or even SIC, maybe another option that you want to consider. But again, in all of these things, you need to engage your stockbroker for further education before you jump into it.
Yes. And I think a good disclaimer is the fact that it changes over time. Today, they can be doing very well. Tomorrow, it might be different. So before you get into that, yes, you have to seek the advice. Now, many first-time investors actually chase what they call hot or cheap stock. Is that risky, and why is it even risky, if it is?
Yeah, so if you are going after stocks that the price is not very high, I mean, I only put it to the fact that you have made your own projections based on your advice of the stockbroker to say that, okay, the price is likely to rise in the next 6 months or 1 year or 2 years. So that's why we are going for it. But if you are going into shares, you shouldn't just look at the fact that the share price is very cheap and that's why you're going to buy it. It's the projection that you need to make as to today it is 20 pesos. If I look into the books, I look at their projections, I anticipate that it can jump to about 3 next year. And that's why I'm buying it. That should be the mindset. That should be the driver of you buying it. And not to say that because it's cheap, I want to buy more and hold more. You can hold 10,000 of a particular cheap shares and be making nothing of it, while someone may just have about 20 of a very good shares and be making more than you. So that's the mindset that you need to put around these things. Of course, if the projections shows that this particular share is going to do very well, but currently the price is very low and you need to buy more, that's okay. But it shouldn't be just for the fact that you can buy more, you hold more. So someone will say, I mean, I have 20,000 shares in a particular company and you are boasting about it. The point is that how much value are you driving out of that? How much dividends are you extracting from that 20,000 shares that you're holding? How much dividends are you enjoying from it? If you're not enjoying that much, then the share that you're holding is, in quotes, worthless over the period of time.
Okay. Let's look at some of the mistakes. What are some of the common or the most common mistakes you see investors in Ghana make, and how can they avoid them?
Okay, so when it comes to the mistakes that a lot of investors make, including myself, sometimes that we go into shares thinking that it's a quick fix approach. So I want to make some quick money out of that, and then I move out of the space. If you go into shares with that particular mindset, you'll be disappointed. Shares are long-term in nature. So if you are going into it, you should keep at the back of your mind that it's a long-term investment. Two, you need to also keep at the back of your mind that investing in shares comes at a risk. There are risks around it, and in terms of the risks, there are about 3 or 4 risks that you need to put up and be aware of. The first one is what we call the market risks. Market risks here, we are talking of the risks that the stock price or the share price may fall in future due to some factors, sometimes outside the control of the company, economic change of government policies, and all of that. So that's what we call the market risks. It can affect your investment. You need to keep that at the back of your mind. The second one is inflation. If your investment returns over the period does not go above inflation, then it means that your real value of the investment has gone down. So let's say you have invested in a company and the company is giving you on the average 5% every year. Currently, if you look at the inflation for last month, which is around 8%, what it means is that if that should continue within the year, your investment did not give you any returns. You have actually lost on that. So that's also a risk that you need to keep at the back of your mind. And then we have what we call the company-specific risks. This is a risk that is specific to a particular company that you have invested in, maybe due to poorly run or bad management, competition within the industry, maybe some fraud which is affecting the company, and that can also lead to your price going down. So that is also a risk that you need to keep at the back of your mind in terms of managing the risks when you're going into shares. The third mistake that I think that people also do when it comes to shares is the fact that they just hear people speak about it, they jump into it. They don't take time to ask questions. They don't take time to read themselves.
Yeah.
Stock is not like treasury bills where you hear the rate, you go and buy it. Stocks, you need to take some time to be educated, take some time to be abreast with the market before you jump into it. Otherwise, and that's why for me, even on social media, I don't like to mention companies, because you mention a company, the person just hears it, they jump into it, thinking that all is rosy there. That's a risk that you need to be aware of when it comes to shares. Take time to read about it yourself, and that's why it's always good to engage a stockbroker, because they have the database of the companies and their projection. They will be able to advise you that this company is not doing well today, but tomorrow it may do well, or it's doing well today, tomorrow that it's not expected to do well. So don't commit so much into that company. It's important that we keep these things at the back of our minds as we jump into that particular space.
All right. So how much research or monitoring should a beginner realistically do before buying or selling?
You don't need much. You don't need to do much. Most of the data that you need to read, you can get them on the Ghana Stock Exchange websites. They have data, if I'm not mistaken, as far back as 10 years data, because they do, I think, a quarterly report on the companies performance of the companies over the period of time. Just take some time, get about 2 years of that report, just read to have an idea of how these companies have done or have performed over the period, and that will give you an idea of the companies that you can settle on, and that will also form the basis for your discussion with the stockbroker, because then you have a basis to be asking the right questions with the stockbroker. Once you do that, I think you should be fine on that score. That's if your goal of the investment or the tenure we are looking at is a long term. But if it's just a short term, then maybe stocks will not be a very good option for you.
Right. Okay. Patrick, let's take some of the questions that have come through this morning, and this one is from Eben in Kwabenya. He says that do you think investing is risky or an opportunity? Oh, forgive me.
Investing is
right,
an opportunity.
Yes, let me.
I mean, everything about life is risk, so I see it more like an opportunity to grow.
Okay. Also, let me look at this other one. All right. This is from. Let me look at this. Joseph Quarty. Joseph Quarty says that I think stocks are too complicated. That's all he said. What do you have to say to that, Patrick?
No, I don't think it's complicated. And if Joseph has listened to us this morning, realize that there's a myth around shares, but I've tried as much as possible to let all of us understand how simplified it is. It's simplified because once you know how to buy it, what to look out for, how you can grow your share, you are fine on that score. Every other thing within the share space, you learn it as time goes on. It's because most of us have been used to, as I said, the fixed income investments. You are used to running business, you are used to farming. But this is another investment option where you keep your money or give your money to a company. The company uses your money to grow. And as they grow, you get your benefits by way of dividends that are paid to you. And then the price of the share going up, which will also benefit you. So if you look at shares in the eyes of what I've just said, you see that it is not as complex as it is. It's a simple process, but it has certain baseline rules that you need to be aware of as you go into the space.
Right. Okay, this one also says that if you buy a company stock and the company shuts down, what happens to your money?
So if you invest in a company and you become a part owner of the company, once the company is no more, the company will have to be liquidated. Here we are referring to all the assets of the company will have to be sold. When the assets of the company they are sold, those that the company is owing by way of loans, we call it debentures or loans to, let's say, a bank, they will be paid first. Now, when they are paid first, whatever is left is what will be distributed to all shareholders according to the number of shares that you hold. So that is something that we need to keep at the back of our mind. So when the asset of the company is liquidated, we break it and then spread it to all shareholders. And usually that's why a company is not allowed to float more shares, which is worth more than the assets that they have. They always have to float or sell shares that are within the asset, so that in future, if the company has to be liquidated, investors will get their money back by the selling of its assets. So that's how the process works.
All right. Okay, Patrick, thank you so much. I think it's been a great conversation. Is there any final thing you want to say before we go?
Yes, I think that first of all, thank you very much for the opportunity for us to educate Ghanaians on what shares is all about. But in terms of final words, I think that my simplest and most important advice in all of this is that invest only in what you understand. When you are going into investment, invest in something that you are fully convinced that you understand. If you can't clearly explain what you are investing in, or what the company does, how it makes money, and why the future looks bright, then don't go into that. Don't invest with that. Start with companies that you use every day. So companies that use their product every day, like let's say MTN, go, you buy fuel every day. You know how much they charge for the fuel, and so these are things that you can easily relate to. And products that or companies that you can also trust. Their brand can be trusted. These are also companies that you can easily do business with. And people that are companies that if you look at their management structure, you are comfortable with, you think that they are well grounded, they understand the industry. These are things that you should look out for if you are going into that particular space. Because when you put all of these things together, you can say that you are confident in that company. And once you are confident in that company, it gives you clarity. You are clear in your mind that, okay, this is a very good one to go into. But shares is one that Ghanaians should really embrace, because it has the future in mind. You are able to make more money in future than just focusing on short-term gains that you are making today. So that would be my final words and advice to everyone who has listened and watched us this morning.
All right, Patrick, thank you so much. I'm grateful. I think it's been a great conversation. You've given us a lot of tips and all of that. We are so grateful. Thank you.
My pleasure. My pleasure. Right. Thank you.
All right. Please do enjoy the rest of your day. All right. So that was Patrick Ba Abankwah. He's a financial analyst and also an investment advisor. A big thank you to him for making time to join us this morning. But that's all time will allow us this morning on the Business Breakfast on Z. It's been a great conversation. I have learned a lot about investing in stocks, and I'm sure you have as well. So you need to be very careful before you get in there. It's a good space to actually multiply your money, but do well to read a lot more about it before you jump in. So that's how we wrap up today. We'll be back tomorrow for other conversations. You know, we are all concerned about your business, your lifestyle, and your leisure. This has been Business Breakfast on Z. My name is Nitrebi Hammond. Please keep listening to Z10.